Well, folks, for the first time in years, this man right here just bought Tesla stock. Yes, for the first time in years. And what I want to take you through in this video is why I bought shares here today. Why not wait 2 weeks, 2 months, 2 years to buy Tesla stock? If you are somebody that is at all interested in Tesla stock, if you're interested in buying Tesla stock or not buying Tesla stock or anything in relation to stock, I hope you get a tremendous amount of value in this video. We're going to go through the numbers, going to go through valuations, going to go through projections for this company, and I'm going to show you why the risk reward is now stacked on my side and why it makes sense to start adding shares of stock. And I am somebody that's owned the stock for many, many years, and I feel like I am one of the few that is realistic around this stock. What I have found time and time again when it comes to Tesla is you've got your insane bullish people, and I've been part of this community for so many years, and I've seen these folks, and they are just like, they view everything as like this perfect scenario and that Tesla only goes up and their revenues explode and all these things, right? And then I see this other side of Tesla that involves these folks that just want to see this company fail, want to see the stock price go to zero and the company just be a joke, right? And are never ever want to understand the fundamental case why Tesla is going to become one of the biggest companies in the world. They refuse to even acknowledge that being a possibility, and they say, well, it's bigger than all these other auto manufacturers, so therefore it's wrong. And it's like, you never view it like that. Just because Amazon's way bigger than all the other e-commerce companies combined doesn't mean like Amazon stock, it doesn't deserve that valuation. That's never the way this game goes, okay? And so yeah, it's amazing, guys. It's the first time in a long time, and it feels good because I've been either a holder or a seller of the stock over the last couple of years, which is not something I usually like to do. But to be quite frank, the valuation went up to silly pricing. It got valued at $1.2 trillion, and the risk reward was no longer there when I understood like what could potentially happen with the economy and what that could do for potentially Tesla's numbers. So let's go ahead and jump into this, guys. Yeah, a lot to get into in this one, but yeah, it feels good to actually have bought some shares here today in regards to good old Tesla mass. So by the way, Tesla was not the only stock I bought today. I did buy some Amazon shares as well. And by the way, if you're wondering how long am I going to buy Tesla for, I'm planning to buy Tesla for the next 6 to 12 months. I don't think this is something I'm going to stop buying anytime soon. I expect to buy this stock for the next 6 to 12 month span. Okay. Now, first thing is, I have to say this. I think it's important. This is the definition of catching a falling knife. Me stepping in to buy shares today, it's the definition of catching a falling knife. If you ever heard that expression before, it's when you buy a stock that is literally in such an epic downtrend that people are like, why even try to step in and catch that baby, okay? And I mean, if we look at this stock, guys, let's be quite clear. The stock price is down 57% in the past 3 flip and flapjacking months, okay? 57% in 3 months, okay? But the thing with me is I don't ever look at it as like catching a falling knife. Like, I acknowledge it, I understand it, right? I understand that I'm catching a falling knife. But at the end of the day, I am a fundamentals-based investor, not a trader, right? And so a trader might look at this and they say, no, I can't touch this thing, right? These are trying to get like kind of the perfect entry and exit and those sorts of things. For me personally, as an investor, like, if I get a Tesla at 125 or 124 or 123 or 122 or 127, ultimately it doesn't really make a big difference in the end because of where I believe this company's going over the next 3, 5, 7 years, right? And so I think that's important. And I step in sometimes and buy some stocks that are absolutely getting wrecked. And Meta's a great example of this. I, put $77,000 in that stock in a very short amount of time, essentially, right? And by the way, it's crazy because sometimes I search my videos on YouTube and like other people's videos come up that like are talking about me. And it's just like, that's crazy to me, man. Like I don't think I've ever spoke on this before in the channel, but like that's just crazy to me. Like, I'm just a regular guy out here who's talking about the markets and talking about stocks. Like, it's mind blowing to me like how many people like make videos and talk about me on message boards and those sorts of things. And I guess it's just a blessing, man. But you got to understand, like, that's not normal to me. Like, I didn't grow up in a family that was like famous. My dad's a pool man and my mom's a house cleaner. And so like, just see that's just like, it's crazy to me that like people like to debate me and talk about me and all those sorts of things, man. That's just like, I never speak about that, but believe me, it blows my mind because I just look at myself as just a regular guy out here. But nonetheless, I spent $77,000 in Meta stock in a very short amount of time, right? And I posted that video. It was Halloween. It was October 31st, and it was real scary times for Meta nonetheless, right? And when in regards to Meta, did I get the bottom? No, I didn't. Actually, I could have bought that stock for even cheaper. Literally just a few days later, essentially. Literally a few days later, it was cheaper than where I bought, essentially, right? But obviously, the stock's gone up considerably since October 31st, like 26%, right? But when it comes to me, and when it comes to catching a falling knife, at the end of the day, like the bigger I go in a stock, is the more confident I am like that stock's about done in terms of going down, essentially. And so with Meta, I put a huge amount of money because I was extremely confident that was about it. It was in like pure capitulation stage, and it felt like it was about done to me personally, right? And so the more heavily I'll invest in a stock, the more I'm confident that that's about it. And so that was a very abnormal move in Meta. But at the end of the day, I just looked at the valuation of the company. I looked at the numbers, what I believe the numbers are going to over the next few years. And it was a silly pricing. And so as an investor, I got to look at one of those opportunities as a very rare opportunity. I'm going to step in and buy, even though a few days later, the stock was even lower, right? At the end of the day, that's just my view on this whole game of, at the end of the day, I'm never going to get the pricing perfect on the upside or the downside. When I'm buying or selling, I acknowledge that, and I'm understanding of that. I just understand that, right? Now, if we start running through some numbers, let's start going nitty gritty here around Tesla, everybody's favorite, okay? So we're using Ticker Buddy here to kind of show you numbers, right? And so Tesla 2021, 70% revenue growth, absolutely extraordinary, right? 50% plus revenue growth, it should be roughly the number in 2022, right? But here's the thing. People are starting to freak out and get very, very scared about the numbers over the next 1 to 2 years, right? And analysts on average are expecting a major deceleration of growth, which is way different than where we've been at. When you go from, let's say, 70% growth to then you're talking about 25% growth, people start assuming like your big growth days are done, right? So everybody's already kind of freaking out over this like potential, we'll see, potential major deceleration of growth. Now, keep in mind, that's still extraordinary numbers. Like if they do 38% and 25%, it's still extraordinary numbers, right? Also, everybody's freaking out over EPS growth, right? Because they had 200% plus EPS growth, let's say roughly 83% or 100% revenue or EPS growth, something around there, right? To then maybe 34% EPS growth to maybe 22%. And so this is very concerning to a lot of analysts or investors of like the deceleration, right? And so that's something a lot of people consider there. But here's kind of the way I look at this, right? The company is trading for actually less than a $400 billion market cap today. But let's say it's around $400 billion, right? So this is a company that as of, let's assume they disappoint huge in 23. Let's assume the economy is really bad and auto sales, let's say, go down. It's just a bad year, right? So let's say they only do $100 billion of revenue instead of $114 billion. That's a $14 billion plus miss. That would be awful, okay? So let's assume that happens. I'd rather assume some pretty bad scenarios, right? And let's assume in 2024, instead of doing $143 billion, let's assume 2024 is weak as well. And so they do $125 billion, okay? So basically, we can also assume on net income side, let's assume they don't grow net income. Let's say Cybertruck, in terms of trying to ramp that product, let's say it's super costly. Let's say Tesla has to, basically cut pricing on vehicles, do extra incentives that hurt margins, hurt profitability of the cars, and simultaneously, let's say they don't find any major cost savings over this next year, okay? That's assuming a lot of bad stuff, but let's just assume it all, okay? So they do roughly the same net income number as they're going to do roughly in 2022, right? So if they do $14 billion in 2023, I'm paying 35 times 2023 numbers, and that's if there's no growth in net income. In my opinion, that's a pretty good deal considering Tesla's long-term runway for net income growth and revenue growth. And that the fact that this company is still very early stage in their net income opportunity, right? Now, let's say they're a year behind on their net income, right? So let's say they do $19 billion in 2024. All right. So I'm basically paying 21 times 2024 numbers for this company if they're a year behind in net income, right? Which is pretty much a disaster. Let's be clear. I mean, that's a $5 billion plus miss. Basically what analysts have on average versus what we could assume the company does in a bad economy, right? Those aren't rich numbers at all. Especially for a stock with Tesla's type of opportunity and type of growth for the future years, like, come on, man. That's not bad at all. This is where the risk reward gets very, very attractive in regards to Tesla, right? Now we could assume, like, let's say, basically I kind of, took a look back at auto sales over time, right? And obviously 08, 09 auto sales really felt bad. So let's say 2023 is a bad year for auto sales. Let's say 2024 gets even worse. Now Tesla should be able to grow regardless. The question is what rate of growth they're going to have if the auto market just goes down for the next, let's say, 1 to 2 years, which is a realistic possibility, which would mean then 2025 and 2026 would see a reacceleration of growth. Okay, so do keep that in your mind as well, because I think that's very important. It's, unless you think the whole next 10 years is going to be awful and auto sales are going to go down for 10 years and do something we've never seen before, that's always a potential, but it's not very realistic. If anything, auto sales can maybe go down for a couple of years, 3 years, something like that. We've already had several years of down, right? And I wouldn't be surprised at all, once again, if 2023 is a down year for autos, given the state of the economy. Now, let's assume the economy doesn't fall off a cliff. Let's say things are okay, right? Which is a potential. I think the economy is in a lot of trouble over this next, 12 to 18 months. But let's assume the economy is okay. Let's say the Fed changes course at, the middle of 2023 before the economy really falls off a cliff, right? Let's assume inflation comes down to the Fed's targets of 2 to 3%, somewhere in there, right? And let's assume we get the soft landing that everybody's hoping for, which I think, once again, is very far-fetched, but let's assume we get that. And so they do these sorts of numbers, right? And let's say these numbers hold up that analysts have. Well, in that sort of scenario, I'm paying 21 times 2023 numbers for Tesla, and I'm paying 16 times 2024. For a company with Tesla's growth over the next decade, that's ridiculously low. There's no way that should be that low, just to be quite frank. And so the pricing is unbelievably attractive in that sort of situation. It's silly. For a major growth stock like Tesla, which is a major growth stock, that's silly. Flat out silly, okay? So that's some food for thought in regards to that, right? Now, next part up here is understanding bear markets, right? And understanding a rough market like we're in right now. And I've always felt, the company I've always felt since a long, long time ago is the number one, if you had to, I had to say, who does Tesla remind me of? It's Amazon. It's always been Amazon. That is a company Tesla reminds me most of. I think that's the most comparable company, right? And so if we're to understand a bear market and how these things work, right, we can definitely understand what Amazon stock went through in the tech bubble, right? And Tesla stock wasn't around back then, but Amazon stock certainly was. And what we found is Amazon stock actually bottomed rather early. Amazon stock bottomed, 1 year and 1 month roughly before the NASDAQ did. Amazon stock bottomed in September of 2001 in the tech bubble blow up, that massive bear market, right? Which is kind of similar to what we have going on right now, just to a little bit of a smaller scale, in my opinion, right? And the NASDAQ bottomed in October of 2002. Amazon stock was 3 times the price by then. Now, do I think Tesla stock is going to be 3 times the price by the end of this bear market? No, I don't. I'm not expecting that. But it's important to understand that Tesla stock could easily bottom way before, and I mean way before, the market itself bottoms, okay? Literally Tesla stock could bottom in the next, this month or next month. While the whole other market continues to get wrecked, don't be surprised if Tesla actually went up in that scenario. I've seen Tesla stock do the craziest things throughout its history. I mean, literally the craziest things. I've seen that stock crash when the market's doing good. I've seen that stock do absolutely great when the market's going down. I've seen it where Tesla's going down with the market and up with the market. I've seen it all when it comes to Tesla. And so don't be surprised if that stock actually bottoms way before the market itself bottoms, okay? And if we look at Amazon over time, right? I mean, everything ends up looking like a blip on the radar. Amazon stock right here, you see that? Amazon stock fell over 90%. Over 90% right there. And it just looks like a blip on the radar. It fell massively here. It fell epically here. Epically here, now, right? And all these end up being a blip on the radar. And this one is extreme as it looks. Believe me, in 10 years, you're going to look back and you're going to be like, that was a blip on the radar for Amazon, because Amazon's going to a $5 to $10 trillion market cap over the coming years based upon their e-commerce business, their ads business, and Amazon Web Services. That's where that baby's going over the next decade. And this, as crazy epic as it looks, will end up just being another blip on their radar for Amazon stock. And that's what you got to understand about these game-changing companies over time, is they go through these down cycles that are very vicious in the moment, but when you look back over time, they end up just being blips on the radar. Tesla's gone through some epic crashes in its history, but they all end up looking like blips on the radar. And this epic crash will end up looking like a blip on the radar, once again, for a company like Tesla. And it's extraordinary to kind of think about that, right? Now, here's a very, very important prediction I have. I think there's about to be an epic divergence between the Dow stocks and the NASDAQ stocks. And what I'm seeing right now is a massive bubble in countless of the Dow stocks. And I'm going to show you a few of those, okay? Just kind of give you some reference here. And what I believe is going to happen is either starting in Q1 of 23 or Q2 of 2023, I believe we're going to see a rotation of money from a lot of these bubble stocks that are the Dow stocks that were like, when everybody was, this year has been an inflation play. So you got to understand like the trend the market's in. So this year has been an inflation play. So it's like, go to the Dow stocks, go to the ones that handle inflation well. That's what people believe. And they throw out valuations and they don't care. And they're like, I don't care if it's at the most insane PE ratio we've ever seen it at. Just put money there because that's where we want to hide out. But now, 2023, we're going to go into the theme of recession, right? And then you're going to go into the theme of, at some point, quantitative easing and the Fed having to obviously do the real pivot and start to help out the economy. So as you go into that, you see damage big time, and not just the S&P 500, but the Dow stocks as well. And so what I believe is going to play out, and it's going to start either in the first quarter or the second quarter of 2023, is this massive divergence is going to end. And the Dow is going to come in line with the NASDAQ, and what you'll start to see is a rotation of money. Because as you get further and further away from inflation theme and more into recession theme and more into, oh, the Fed's going to have to pivot, the more people are going to start to consider, oh, crap, I'm going to need to start positioning for the next bull cycle, which will be NASDAQ stocks, which will, what does everybody want to be in? Everybody wants to be in. In the short term, people will be in Coca-Cola and McDonald's and all those stocks, right? In the long term, what do people want to be in? Amazon, Tesla, Google, Meta, Shopify, Nvidia, AMD. People can say what they want to say, but at the end of the day, when you're in a bear market, sure, people flood to these Dow stocks, but man, once that thing even is getting close to over, people are going to rotate that money so fast you wouldn't believe it, to the stocks that they actually want to be in, that are actual game changers over the coming years, right? And we have bubbles in the market right now, and I can't even believe the stocks that are bubbles, right? If we thought, Tesla was a bubble and Shopify and I don't know, Amazon or whatever stock, like that's one thing, right? But McDonald's stock is a bubble right now. I can't even believe what I'm seeing. Literally, this stock is a bubble, and it's gonna pop. This stock is trading for a PE ratio in the 30s right now. This stock should be trading at a 10 to 20 range for a PE ratio. This bubble is gonna pop, and it's gonna pop in a major, major way, okay? United Health stock is a bubble right now. Literally, this stock should be trading at, once again, a 10 to 20 PE ratio, somewhere in there. And it's trading ridiculous right now. I mean, a 15 would be fair for a stock like United Health. And it's trading at these insane valuations, like, come on, man. But that's the market we've been in the inflation theme, and so inflation theme, a lot of people flood to these sorts of stocks. They're going to have an epic popping. And it's going to be pretty extraordinary because you're going to see many of these Dow stocks, you're going to see many of them fall between 30% and 60% in a matter of a 12-month span. And you'll see a popping of all those stocks and getting into valuations that aren't undervalued. They'll go to a fair value. That's the thing. Like, in order for some of these stocks to get into undervalued territory, they need to fall over 60% for some of them, which is extraordinary, okay? And so do keep that in mind. And so I see that definitely playing out Q1, Q2, okay? Let's talk about Elon Musk. What do I think? Do I think he's going to sell more shares of Tesla stock in 2023? And do I think he's coming back over as full-time CEO in 2023, okay? My opinion is, this is my personal opinion, as somebody that's tracked this guy for a long, long time, okay? What I believe is I actually don't think Elon's going to sell Tesla stock in any significant way in 23, if at all, in 23 and 24. I think for the next few years, I don't see Elon selling. And if anything, I think he's going to try to make Twitter a success and probably take Twitter public in the next 1 to 2 years if he can flip that around to be a profitable company, probably take them back public again. Likely, especially if he can get a bigger valuation than what he sold at, he'll probably cash some of that. And I wouldn't be surprised if at that time he actually starts to become a net buyer of Tesla stock again, which would be obviously very, very interesting to see kind of that play out, right? And so that's my personal opinion as far as that goes. Now, I also believe that Elon Musk will come back over as a full-time CEO at some point in 2023. I don't know if it's the first quarter or the second quarter, but I believe he will focus his attention back over there. I think he's just trying to get this Twitter situation, trying to put the fire out. That's the best way I could put it. I think he's just trying to put the fire out of Twitter. I don't think he wants to be the chief boss over there at Twitter long term. I think he just wants to put this fire out, find somebody to take his place, and then go ahead and move on. And still be involved with the company in a pretty significant way, but I don't think he actually wants to run that company for the next many, many years. I think he just wants to get it in a decent place, find a real boss that can take that company over, right? And then go ahead and focus his attention back on Tesla because we all know that's where his biggest opportunity is. Twitter, even if it's a major success, it's still a minor success if you compare it to Tesla. And I think that's something very important for everybody to kind of keep in mind in regards to this. And so that's my opinion. So that whole situation, I don't see being much of a factor moving forward. And so, nonetheless, first time in years out there buying Tesla stock again, and planning to continue to buy the stock over the next 6 to 12 months. Appreciate everybody for joining me as always. Much love. Merry Christmas, and have a great day.